Hello and welcome to week 2. I hope everybody found week 1 very interesting and you had some good analytics for your company, and also that your group projects or your groups were able to get together and choose a company to look at. This week we're going to expand on our analytics a little bit, and we're going to be looking at horizontal and vertical analysis along with some financial ratios. So these are additional analytic tools that we can use to look at companies' financials that are published publicly and to make decisions about potential companies. So we're going to be doing everything in Campus Cruiser, and you'll be looking at student tools and your course content. So you go to student tools and my course content, and then you're going to be in week 2. So in week 2 I have a short summary here, just talking about just reinforce what the assignments are. You will be posting a message board, and there is an assignment in the Accounting and Managerial Decision Making book. We call it the Cabot Financial Ratio Problem, where you'll actually be calculating some ratios, and then you'll be writing a paper as well. So I'll be talking through some of those things. If you look over here on your Campus Cruiser and Student Tools, you'll just see in Objectives. You can read that. It's just a short summary of what we're going to cover. In our readings, this week you'll see a file. So if you download that file, you'll be looking at our readings. So you're going to be looking at the Harvard Business Review Guide 43 to 55. The Accounting and Managerial Decision Making, Chapter 13 is a very good summary of horizontal and vertical and the ratios themselves. Part 5 in Financial Intelligence is optional. If you did buy the book, read it. If you need a little bit of if you feel a little rusty, read that book. It's a good read. And then finally, Financial Statements by Edelson in Chapter 13. So if you look here, those are our readings. There is a short PowerPoint that just gives you some additional tools and some additional questions that you could potentially ask. And then our discussion items. So our discussion items, there's only one discussion item this week. That will show up on the message board. But what I want you to do is you're going to look at this, and the question in the discussion message board is going to be, what issues and limitations can an analyst encounter when they're looking at different companies and looking at ratio analysis, and then how would they handle those? And then I want you to at least respond to 3 other students' posts. So you'll post your answer on the message board, and then you need to go to 3 other students and post your response to them as well. Feel free, don't limit yourself with 3, and if you get into a discussion, that's great. We look forward to reading those, and that's really where the learning begins. Lastly, I have a list of the assignments out there. So the assignments are here, and they're also under assignments within Campus Cruiser. Give a little bit more information here on the assignments. So your written assignment will be using the ratio and trend analysis. You're going to take a look at the company that you did last week. When you wrote up your executive summary. Please don't use the company that your group picked. This is the company that you were interested in. And then you're going to take a look at the data that's out there. So using horizontal and vertical, using some trend analysis, looking at the financial ratios. How would that change your view, and how would that change, if at all, what you wrote last week? And then I put here some questions that you can take a look at to use to guide you, okay? But you're taking a look at your analysis that you did last week, adding in these additional tools, and then saying how would that change, or what additional questions or what answers would you come up with. The second part of the second assignment that's due this week is actually, this is a practice assignment, so you'll actually be calculating some financial ratios. The assignment can be found in your Accounting and Managerial Decision Making book. It's on pages 38 and 39, and it's problem 13-4A. So what you're actually going to be doing is you're going to be calculating some ratios, and you're going to calculate and compute those ratios. And I'd like you just to, if you see anything that strikes you about that, just note it. You can do this in Excel. That's probably the easiest way to do this. And then also I've posted an Excel file out here, and which we'll go over in this video itself. So you can use this Excel file as a guide to actually calculate the ratios. So we'll move on to that. So that's the last file that's out here. So this Excel file, I'm going to open that Excel file up. You'll see that there's 3 tabs to this Excel file. We have a horizontal, we have a common size or a vertical analysis, and then my ratios. Okay, so in a horizontal analysis, think of this. Horizontal, it goes sideways, it goes across. So a lot of companies, if you noticed on Morningstar, you had almost 5 years of data that's out there. Okay, so this file that I have here follows along with the book, the managerial accounting and managerial decision making. If you did the readings, you'll see that the book referenced a company called Precision Company. So what I did here was actually just lay out a horizontal and vertical analysis similar to the Precision Company that is there. I believe it's on pages 26 and 27 within the book. And you can see here. So what's important though within Excel, if you're not familiar with it, is that you can actually see the formula here. So see how I clicked on cell E6? If you look up here, you'll see that's the formula for E6. So you have an increase or a decrease year over year. And then if you look here, you'll see the formula and how we calculated the percentage of change. So that's the beauty here. I mean, in the book, you can see the amounts and you can see those, but here you can actually see the calculation. So I think that that helps you out. So you could use these files when you're actually doing your company. You would obviously have to change if they have any different categories or if they have additional years. Also change the name of the company and then change the numbers. But because the formulas are here already, it might make it a little bit easier for you to follow. So you could go down and you can see that all the increases and decreases. And then we also, just put in the formulas for all of the various total operating expenses, etc., so that you could see how those formulas were calculated. So I felt like this was a helpful thing. It helped in the prior classes, and I thought that this might help you out here. The same way with the common size or vertical analysis. Think of this as vertical, goes up and down. Okay, so you would do this. You have here's your balance sheet. All right, again using the same company, Precision Company, that was in your book. And what I did is actually calculate. Okay, you can see the calculation here. So in a vertical analysis, a lot of times in your balance sheet, what you're going to calculate against is, what is cash as a percentage of your total current assets? Okay, what is liabilities? So what are liabilities to, in this case, your liabilities are going to go down to your total assets and liabilities. So that's going out to your total of liabilities and equity. So you can see again your formula. So if you go and you click on this cell and you say, well, how did Professor Harmon Ching calculate that 9.7%, or how did the book calculate that 9.7%? You can actually see the formula that's here. So feel free, you can go in, you can download this Excel spreadsheet, and you can play with it, but most importantly, know how you can find your formulas and what we're doing. But in a vertical analysis, what you're doing is you're saying, okay, what's the percentage of my sub-assets to my total assets? Okay, so this is saying here, what is my total cash to my total assets, which is down here in cell B22. The other thing that you can do is you can press on F2, and that's not working here. But if you press on F2 on your particular computer, it'll highlight the cells too that are in that formula. So give that a try. You can see here that I have some wording, and then I also posted out, here's some questions. So here's a question that I had. So were there purchases of new equipment? In here, they're increasing, so this is increasing. In 2014, cash is increasing as a percentage of total assets. Why? We might want to then go into the MD&A and figure out why that's increasing or decreasing. Did they liquidate some short-term assets in this case? So short-term assets is down. So maybe they liquidated or they sold some of their short-term investments and they actually put that up in cash. Something like that may or may not show up in their MD&A, but it might be worth something to look at. Why then are they liquidating their short-term assets in order to get cash? Is there some underlying problem that they need that's going on that they need more cash? Or maybe they're thinking about buying something, so they want to get the cash together because they're going to buy some new equipment, or they're going to, they want to beef up their cash position to maybe for a potential merger, that sort of thing. So your accounts receivable are higher. So why? So if we go over, we may jump over to the income statement, which you'll see over here. So note, sales are higher. So is there a connection because their receivables are higher and their sales are higher? So you may want to go over and you look at your income statement. So let's go jump over to the income statement now. You'll see that over here. So what I did was I put the balance sheet over here on the one side and you have the income statement on the other side. Usually with a vertical analysis, your income statement is going to do everything as a percentage of sales. So what's important is saying, okay, what's advertising, for example? Advertising as a percentage of sales. And then yes, advertising as a percentage of sales, because you want to see, well, how much am I spending? What are my expenses versus what I'm bringing in? So you want to take a look at that. So you take a look and you start to ask some of the questions. So I posted over here some questions that I had that, you know, when I'm analyzing this statement, these are some of the things that I would ask. And then, you know, that would help guide me on where I would go further. So let's go look at the ratio tab real quick. So here's the ratios. What I did, it's not the most beautiful worksheet, but what I did was I laid out the balance sheet, okay, and also the income statement. So your income statement is up here, and your balance sheet is down here, okay. And then what I did was I just said, okay, here's a ratio that I know is on the income statement, so I put that up in here. And you can see, again, the formula. So what I'm doing is I'm taking B8, which is my gross profit, and divided that into my sales. So in this case, my gross margin is 38% versus 41 last year. So we might ask some questions about what's causing it. You know, is operating income, are my operating expenses higher? Are my sales lower? Is my operating expenses as a percentage of sales going up? You know, that sort of thing. So those are the kinds of questions that you would ask. And then you have your profit margin. Again, if you wanted to see that formula, you would go and you'd see that B25 again into B6, which is your sales. So, and then if you go down and you look at some of your balance sheet ratios, I listed the ratio down here on the side. So you have your current ratio, and then again, you can see the formula here. So you can see your current ratio, okay, versus 2015 versus 2014. And if you can follow along, so you would say that, okay, your current ratio is your total assets, divide that into your, sorry about this, divide that into your total current liabilities. So that's what we're pulling in there. So you can see the cells that I'm actually using to calculate that information. And then you have your asset test ratio, which is your cash plus your short-term investments plus your accounts receivable. So those are your very liquid things. And then you divide that into your total current liability. So that's your asset test. And that's your, again, these are liquidity and your efficiency ratios. Then you have your accounts receivable turnover. So in order to do that, you need to know your average receivables, right? So I take my beginning and ending average receivables. So I'll take my receivables ending balance for 2014 plus my current balance for 2015. I just divide those by 2 to get my average for the year. And then I calculate my average receivable turnover by taking my receivables into my average. And that would be, again, your accounts receivable turnover. And then I can do my days uncollected by taking that accounts receivable, my average accounts receivable. I could take my accounts receivable balance, dividing that into my sales, and then timesing that by 365 days, and then that gives me my days that my receivables go uncollected. So you can read all about what these different numbers mean in your text, but you can actually see the calculations here. The same with your average inventory. Again, so think of this as your days, your average, your accounts receivable turnover and your inventory turnover. You need to average those balances out. You don't want to just take the balance at the year end. You also have your debt ratios. Again, you can click on these cells and you can see those particular formulas. So I think seeing those formulas and seeing what numbers are used to do the calculations, that will help you with the Cabot exercise. So you can use this. You could use this file to use this file as a reference to see how the particular transaction or how the particular financial ratio is calculated. So when you do that Cabot exercise, you can create an Excel worksheet. You can put in the information that the book gives you for the various financial statements for the balance sheet, and then you can do your calculations. So when you submit the Cabot exercise, you can submit an Excel spreadsheet, and then what we'll do is we'll go through and we'll calculate your